In the Federal Capital Territory, where the Director General of the Securities and Exchange Commission, Ms. Aruma Ote, returned to the House Committee probing the stock market, and yet again more revelations came spilling in. One of such was the purchase of Rolex wristwatches and other luxury items such as a yacht, all bought without proper accounts.
Of the hearing to also take
no drama, tempers were not flaring as the House Committee continued its investigation into the near collapse of the capital market. This time around, only the Director General of the Securities and Exchange Commission and the Chief Executive Officer of the Nigerian Stock Exchange gave account of what they say transpired in the Nigerian capital markets before they assumed office in 2010 and 2011.
Information from the exchange was also scant and fell short of addressing investor fears, both locally and internationally from the onset. Requisite analytical data for management purposes were unavailable, and market reports looked mainly at stock performance, with little attention to market trends, macroeconomic shifts, and risks. Cultural nuances and the perceived success of the market between 2004 and 2008 impinged on good leadership, and the exchange delayed all necessary reactions to the state of the plunging market.
Revelations by the Securities and Exchange Commission boss, Ms. Aruma Ote, began with accusations of financial misconduct by the former counsel of the Nigerian Stock Exchange.
It was brought to my attention that there were incidences of financial scheming, misappropriation, false accounting, misrepresentation, and questionable transactions. For instance, the Nigerian Stock Exchange bought a yacht, or should I say boat, for 37 million naira and wrote down the book value within 1 year by recognizing it in its books as a gift presented during its 2008 Long Service Award. Yet, there are no records of the beneficiary. The stock exchange also spent 186 million naira on 165 Rolex wristwatches as gifts for awardees, out of which only 73 were actually presented to the awardees. The outstanding 92 Rolex watches, valued at 99.5 million naira, remain unaccounted for. These were the kinds of financial imprudence that were perpetrated at the Nigerian Stock Exchange.
That was not all.
In 2009, 1.7 billion naira of the 2008 operating surplus was distributed to council members and employees in violation of CAMA and SEC rules. This happened in previous years. Other notable fraudulent transactions include the reclassification of the sum of 1.3 billion naira originally expended on business travels. Of this sum, almost $1 billion was reclassified under software upgrade and subsequently expended as against being capitalized.
Our presentation did not finish without some suggestions for the ad hoc committee going forward.
The first step is that if people have made illegally gained profits, we should get them back and restitute retail investors. That is the first step. And I do believe that people should be brought to book. I believe that. Because this issue of confidence is very key. I believe that all of us, all stakeholders, should certainly play their part in this respect. And I hope that what you are doing with the public hearing, which I think was termed almost a truth and reconciliation, can help us in that path.
And going by these revelations, questions are being raised about whether the former council members of the Nigerian Stock Exchange, who have been accused of gross misconduct, will be allowed to give their own side of their stories as investigations continue. This hearing is expected to continue on Tuesday. Bolaji Akinwale, reporting for Channels Television News.